Good evening, everyone. Time for another silver update. This is the 4-hour chart of silver and gold overlaid, provided by netdania.com. You can click on the link below. Also have the volume down here. Now, I posted on the member site a chart, an interesting anomaly that was developing. We can see that when we'll move back out to the 4-hour here, but it was more clear on, I believe it was the 5-minute. But basically, we're about to break out into new highs. The candlesticks here are going to be silver, and then the line chart is gold. And both gold and silver were about to break out, and then we had a big smackdown right after this rise here. This was earlier today. And this was the selling volume coming in on silver. Interesting to see a lot of volume here after hours. But just as gold was about to rise into new highs, silver came down really hard, was attacked, and then gold followed it. Now we've come up after hours. But if we go back to that 4-hour chart, you can see that there's this interesting divergence going on here. You can see gold heading much higher here. And this goes back to August. So this is not the longest term, but fairly long term. And you can see this is a big divergence here. Silver's still on essentially a downtrend, although it is now beginning to test that, you can see. While gold is clearly on an uptrend. So why is that? Well, silver, again, is not considered money by the powers that be, and gold is, and we've gone over the reasons many times. They don't want that to be the case. Now, it's not their decision to make because, as Professor Fichetti has pointed out, money is what people decide it is. In other words, Gresham's law, whereby bad money drives out good, which means that people use the bad money for spending and they save in the good money. Well, that principle causes people to save in good money, and of course we know good money is gold. Now, I believe that silver is actually better money, and that's because it's rarer, much rarer as far as what it's being valued as, with this ratio still above 60-1 for the gold-silver ratio. So it is the powers that be, it is their belief that silver isn't money, and they certainly want everyone to agree with them. Of course, apparently the people who are buying all these silver eagles don't agree with them. So that's part of what's going on, although as we look at some of these other stories, there may be something else going on here as well. The first story I want you to look at, this is on the economiccollapseblog.com, is Dr. Copper foreshadowing a stock market crash just like it did in 2008? And he says, is the price of copper trying to tell us something? Traditionally, Dr. Copper has been a very accurate indicator of where the global economy is heading next. For example, back in 2008, the price of copper dropped from nearly $4 to under $1.50 in just a matter of months. And now it appears that another big decline in the price of copper is starting to happen. So far this year, the price of copper has dropped from a high of $3.40 back in January to a price of $2.95. So that's not that big of a drop. But it is called Dr. Copper, and it makes sense. Copper is one of the goes into pipes and is used in construction. So if construction is going to fall off a cliff, then it makes sense that copper would sell off. But when we go and look at the charts on Kitco, now I've gone over these before. These are the historical charts of the spot price as well as the stocks. And so we want to go over and look at copper. We've looked at some of the base metals recently. Now copper, actually, if you look on the 30-day copper, you can see your big drop off on the 6 month, and you can see the drop down to 3 on the 1 year. But when we get out to the 5 year, it's not so dramatic. You can see that 3 is pretty much the average price, and it's just dropped down to about 3. So as far as historically, copper is still fairly high. I don't have the data here back in 2008, but you can see that it's below 2 there. He said it was $1.50. So still fairly high, but these copper stocks seem to be dropping drastically. Now, the 1 year looks very ominous, but if we go to the 5 year, you can see that it's not as ominous as the 1 year because we've been lower. You can see that during the period of most of 2012, the warehouse stocks for copper were very low, lower than they are now, and then you can see they just accelerated to the upside. Now, if normal supply and demand hold, one would expect to see eventually these warehouse stocks going very low. That's going to cause a rebound in the price of copper. That is what supply and demand would tell you, but that doesn't appear to be the case. When we look at some of the others, it just doesn't make sense at all. So, for example, when we look at nickel, we can see that the nickel price on the 5-year chart is not nearly as high as it's gotten. Back in 2011, it got to about 13, and we're hovering around 7 or so right now. So it has been quite a bit higher, but if you look at the nickel stocks right here, they're absolutely through the roof. So this would be the price of the base metal that you'd expect to collapse, but you can see that it's not collapsing, but the warehouse stocks are at unbelievable highs. So what's going on? It doesn't make a lot of sense, and you'll see the same thing when you go over and look at aluminum, lead, and zinc. You'll see anomalous types of behavior. Now, if we go over and look at the Baltic Dry Index, you can see that today Zero Hedge is reporting the BDI, that's the Baltic Dry Index, plunges 8%, near most in 6 years, as iron ore at Chinese ports hits an all-time high. It would appear record inventories of iron ore and plunging prices due to China's shadow banking unwind have started to weigh on the all-too-important when it is going up, but let's blame supply when it's dropping Baltic Dry Index. With the worst start to a year in over a decade, the recent recovery in prices provided faint hope that the worst of the global trade collapse was over. However, today's 8% plunge, on par with the biggest drops in the last 6 years, suggests things are far from self-sustaining. Still think we are insulated from the arcane China shadow banking system, which suddenly everyone is an expert of. Suddenly, think again. And then here's the chart of the Baltic Dry. These lines here, the red and the black, this is the percentage change in the index, but the blue line here, this is the Baltic Dry, and you can see that high. I've covered this before. Actually, it was higher than this 9,000, but you can see that going back into 2008. And it dropped all the way down to 800 or so. It was a catastrophic decline. We're talking about 90+%. And you can see that it essentially has never really recovered. Its best recovery was in early 2009 and 2010, and then it just collapsed back. By January 2011, it was back to the 1,000 line and has pretty much stayed there ever since. So today's 8% decline indicates that it's probably not going to go away from 1,000 for quite some time. Probably below it. Now here's the chart of China's ore inventory, iron ore, and you can see that it has gone from a fairly low read to actually a record high read, and they refer to the banking crisis and apparently implying that there is a shipping crisis due to that. But so those are some anomalous things. We've got Baltic Dry Index dropping again and record iron ore inventories. We've got copper selling off, but the inventories being very low. We've got these other base metals that have record high inventories, but the prices haven't fallen. So what is going on here? And then, of course, the last one is going to be this divergence with the gold and silver prices. And gold is beginning to trade like money, and silver is trading like a commodity. So what is going on? I think that perhaps, I'm just guessing, I don't know, that perhaps the speculations of, if you've listened to the latest Lindsey Williams, he talks about what this insider that he speaks to describes the currency reset that's going to occur and how that's going to take place. That's also similar to the saddle tramp information that I've covered in previous articles on the blog. And they're very close in what they're saying. Basically, the idea is that the IMF is going to bring in these special drawing rights or something like them, and what they're going to do is they're going to revalue the currencies of the various nations of the world, and they're going to do this on the basis of their assets. So then the question immediately becomes, well, what's an asset? And that's the big what if, because obviously, as I've mentioned before, if we consider stocks to be one of these assets, then the United States would welcome this type of reset, because that would mean that we would have the most valuable currency in the world, because we have a market cap of companies, stocks, that is higher, this is the Dow 30, that is higher than the market cap of other markets all added together. Even the Chinese Shanghai Composite Index is stuck at 2,000. It's down 60-70%. Same thing with the Japanese stock market is down 60-70% still after 30 years. So obviously, if the IMF decided that these assets are the assets that they're going to value the currency on, then the United States would do very well. I don't think that's what it's going to be based on. Perhaps it's going to be based on things like gold, silver, and base metals and manufacturing capacity. After all, when you think about it, that's really the true wealth if you don't have the ability to manipulate a paper currency like the United States has had with the petrodollar. Then things like oil reserves, natural gas reserves, and precious metals and base metals, those are going to be the basis of the value of a country if some type of comparison is made in order to reset the system under this new system. So if that's the case, then it may be that some of these countries are beginning to strategically position themselves in regards to stockpiles of some of these things. It appears that even things like iron ore could be stockpiled. We know that China has been stockpiling a lot of things. We know that China is stockpiling gold. We know that they're the 95% producer of rare earths, and it appears that they're stockpiling a lot of other things. So if my speculation is correct, then it may be that this Lindsey Williams saddle tramp type of IMF currency revaluation is right around the corner, and that's why we're seeing some of these anomalous price moves in the precious metals and the base metals. And we'll talk to you next time.